Hello everyone, my name's Dean, let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 5th, 2023. And Bitcoin, as well as the rest of the cryptocurrency markets, are kind of just hanging out sideways, right? Recently, we had a very small move to the upside, okay? Relatively small move to the upside. We broke out of this inverse head and shoulders pattern, right? And we hit the technical target of that, okay? What is the technical target of an inverse head and shoulders? It's simply the size or the height of the head from the neckline, okay? So you take that, you superimpose it from the site of breakout. We can do that with an arrow here, okay? And you should basically get your target, okay? So that's your technical target right there, and it was met. So the technical target for this breakout has been met, all right? So this is small time frame analysis, okay? And once you do that, what happens next? That's the question. Well, if this is a bullish breakout for an impulsive move, okay, which we posit that it is indeed such, then what you're going to do is hit your target, retrace, and continue. You're going to set off a you're going to set off a chain reaction of such breakouts. What do I mean by that? Okay, so you first broke out from this inverse head and shoulders. You hit your technical target here. Next, you now break out from a larger head and shoulders. Maybe this one, or even this one. Do you see how this works? It's a chain reaction of bullish breakouts. That's one of the ways you can define, or one of the ways you can characterize an impulsive move. It's a series of those kinds of moves where you go from a smaller pattern that's bullish to a larger pattern that's bullish to an even larger pattern that's bullish. Same thing happens in a bearish trend. That's trending price action. So let's say, okay, just for the sake of argument, that this is your next inverse head and shoulders that you're looking to break out of. Likewise, you would take the head of that pattern, superimpose it. Okay, we can do this with some tools to be more accurate. Superimpose it from the site of breakout, which is from the neckline, which you could say is actually, whoops, I would say the neckline's here, right where we're at right now. Okay, so let's just clean this up a little bit. So again, mind you, this is all small time frame technical analysis, but you know, this is a daily show, so people are interested as to what's likely to happen on the small time frame. So on the small time frame, if you look at this, your next technical target is up here, but that's kind of in no man's land, okay? You're neither here nor there. The next major or significant resistance, let's say, would be up here. Do you see around 18K? So I would say even if you did break out of this and you did some retracement, you would at least hit this target right there if that were the move that you were making, okay? So that's my small time frame analysis on Bitcoin. I know there's a lot of noise in the market talking about Silvergate, digital currency group, all that stuff. You know, one of the reasons you do technical analysis is so that you can have a little more established data to work and trade off of. Even though, let's say something did happen some sort of news event. Question is, when does that affect the market? Is it immediate? Is there a lead time, right? All these questions, right? Hard to answer, but it's a lot easier to just open the charts and look at some patterns. So that's Bitcoin on the small time frame. I started with that because this is the daily Bitcoin update. A lot of people come here because they're crypto enthusiasts. They're interested in Bitcoin. But today, I really want to focus on the DXY, the US dollar currency index. This is our number one indicator on this channel. And it actually should be the chart everybody's looking at, even over the Bitcoin chart. Why? Because even looking at Bitcoin, there's just so many different possibilities of how we can matriculate up and down, especially on the small time frames, right? Larger time frame, we have a decent idea that, okay, we're looking at a move like this, but on the smaller time frames, a little bit of, who knows? Who knows? That's the tricky bit. The smaller the time frame, the more variability in these moves. That's why it gets a little more tricky to trade. But what dictates Bitcoin's price action? Okay? It's the DXY. This is not an opinion. This is a fact based off of this data. If you've followed my work, you know exactly what I'm showing you. I'm showing you a monthly chart of Bitcoin and a monthly chart of the US dollar currency index, the DXY. And so each bar, each candlestick is a month's worth of trading price action. And the dates are lined up in such a way that both assets are kind of lined up in the same way, right? So 2015 is represented by this line on both charts. 2022 is represented by this line on both charts. They're lined up, they're synced up. So you can really make a comparison. And the comparison that jumps out at you is that they're mirror images of one another. More or less, they're opposites of one another. This is what we call an inverse correlation, okay? So this is why we're so big on the DXY, because for 12 years, that's 12 years worth of data, right? Or sorry, 10, let's say, from 2014. Is that 2000? Yeah, from 2014, 2023. That's 10 to 11 years of data, okay? So pretty much Bitcoin's entire lifespan, it's been inversely correlated to the DXY. So if you want to know what Bitcoin does, you look at the DXY, because one leads the other. Makes sense, right? Because the dollar is what people use to buy Bitcoin. People don't necessarily, obviously they sell Bitcoin into dollars, but first they buy Bitcoin, right? The dollar came first. And the dollar is just the more preponderant asset, right? It's the underlying asset. Anyway, most of you all know this. This is why we look at the DXY. This is why we're so focused on it. And as I showed in the thumbnail quite clearly, the dollar is about to plummet, okay? The US dollar currency index, the index that measures the dollar's relative strength against a basket of world currencies, right? The yen, the pound, the euro, the franc, the Swiss franc, the kroner, so on and so forth, the Canadian dollar, those six, and probably others as well. It is about to show some weakness. How do we know that? This chart is quite simple in its illustration of that, okay? And this is why we read charts, right? You can, if you're in crypto today, everybody's talking about digital currency group, Silvergate, this, that, and the third, all this stuff. Look at the dollar. What's the dollar telling you? The dollar's telling you that it's about to break support, okay? The support that it's been forming for almost 200 days with this inverse, or with this head and shoulders pattern, a bearish pattern that has already been confirmed. I know somebody in one of my videos, I think another DXY video yesterday, wrote a comment. And that comment went like this: the DXY will make a higher high in 2023. At that point, Bitcoin will bottom, and at that point, the bull run will start. Okay, first and foremost, 2023 is a year's worth of time. In the DXY can make a higher high in 2023, but that doesn't mean much. If it makes a higher high after, it's likely to make a higher high at some point, because if you do your analysis, this entire run, 12-year run to the upside, has just started breaking. Okay, that's what we call an initial break of structure in technical analysis. And in Elliott wave, we call that an A wave. Okay, after the A wave comes the B wave. Okay, and the B wave's the counter to that, which should yield a higher high. Okay, when we're gonna get that? Maybe sometime late 2023, early 2024. I don't know, but that is when you would make most likely a higher high with the dollar, but not before. Not before. Sorry, I drew this a little bit badly. Not before doing this, coming down here. Okay, you gotta come down to at least here. More likely than not, you're coming all the way down to support. Okay, you see this dotted line here? This is support. It's represented support for years, not days, not weeks, not months, but years. You can see it. One of the many things I love about technical analysis is that obviously there's interpretation, but at the end of the day, you just look at it. It's really hard to argue. Okay, if something's in an uptrend, it's been going up. You know, you can argue that this is not in an uptrend, but like maybe in opposite land, like that's clearly an uptrend. Higher highs and higher lows. That's incontrovertible. Okay, what else is incontrovertible? That this is resistance. This upper line is resistance. What else is incontrovertible? That this lower band is support. Okay, so when you're talking about the dollar breaking down, more likely than not, you're looking at a breakdown to support or close to support right here. That is the massive drawdown, the massive collapse that we're looking at in the dollar. Okay, when I say that, it doesn't necessarily mean that societies will falter and all that stuff. It's just, this is a natural progression of markets, right? You can't go up forever and you don't go down forever. You have to correct, right? That's good. And so I know that there's artificial correction, like, you know, Fed's raising rates and all that stuff that I don't necessarily understand completely. But naturally speaking, all of this works itself out according to Elliott wave analysis, according to market theories, because buyers are never always buyers, sellers are never always sellers. People execute, or people express their desires, their greed and their fear in whatever market in regular ways. So they're never always buyers, they're never always sellers, and so you're bound to get drawdowns and you're bound to get markups, right? So when we're looking at this, and people can argue all they want, you clearly hit resistance here with the dollar, and you've clearly rejected off of it, and you're clearly targeting the bottom, somewhere on the bottom of this range that's been intact since 2008. Okay, so I love this because it is very, very, I mean, you can interpret it all kinds of ways, but it's so clear sometimes. There are certain things really hard to argue. Okay, so whatever digital currency group is doing, maybe that may affect, or whatever FTX does, maybe that may affect, or not maybe FTX, but like whatever, some government, maybe it may affect the trajectory of how it goes down. But the fact that it's going down and the general trend is down right now is incontrovertible. Okay, and so going on smaller time frames, we're saying that the dollar is on the brink of collapse only because we're seeing a breakdown, quite simply, of a large pattern and a retest of that pattern, and now a break out or breakdown. So that's it. It's that simple. It's that simple. You know, you can complicate it with saying this, that, and the third, but I mean, trade against this if you want to. I don't really care. Everybody's entitled to their own opinion. That's the beauty of the world. And, you know, you can say it. You can voice your opinion just like I can voice my opinion, right? Nobody's going to, you're entitled to your own opinions. But I think it's quite clear here what's going on in the charts. And also, if you look at your momentum indicators, what do you see? That on the daily time frame, you're completely overbought. Okay, on the 4-hourly time frame, you're completely overbought. On the hourly time frame, you're completely overbought. So it's very likely that the next move, and on the 15-minute time frame, you're getting up there. Okay, the next move in the DXY is a big move down, and that big move down is only because. Sorry, let me fix my screen here. I hate when that happens. Guys, don't forget to like, share, and subscribe if you're getting value. Only if you're getting value. If you're not, feel free to dislike the video. I don't care. Alright, here we go. So, what was I saying? We're expecting a big move. Only because this is major resistance, right? And that major resistance is the support level of this inverse head and of this head and shoulders pattern, the neckline of this head and shoulders pattern that was lost. Remember, guys, real simple. In technical analysis, whether you think you have a head and shoulders or you think you have an inverse head and shoulders, it only is confirmed once you break the neckline. This clearly is the neckline that's been broken. Broken December. This is a retest. Everything that happens after this is not bullish. Everything that happens after December in the DXY is not bullish because it is under resistance. So, you know, a little bit of perspective. Once you're under resistance, it doesn't matter if you rally to the top of your resistance level, right? This is the top of the resistance level. The dollar did this last night. People who don't know how to read charts or don't have any context are like, ooh, it's going up. No, it just hit resistance once more. It just retested resistance. Even if it wicks above it a little bit, it's much ado about nothing, right? All your technical indicators, your high time frame, stochastic RSI indicators are telling you the same thing. Okay? And so it's very clear that once this consolidation, whatever it is complete, that's the big move, okay? So if the dollar collapses at that point, we can then expect Bitcoin and cryptos to rally in a major way. That is the beginning of the bull market. This is what I've been saying on this channel. And you should see it not just in Bitcoin, but obviously in altcoins. And some altcoins have already started. Okay? So that's pretty much the analysis. Okay? There's no reason to draw it out or to make it longer. It's quite simple. And it's a bit of a rehash. But obviously we have more candles printed on the DXY. So I could get even more specific on what is likely to happen in my estimation. Okay? So now just going down the watch list, you can see Bitcoin on the 4-hourly time frame, throwing in our stochastic RSI indicator. You can see Bitcoin has double bottomed here, okay? Double bottomed on this support level, right? that we have designated by this blue rectangle, continuation is likely at some point. Okay, same thing here with Ethereum, except it is a slanted double bottom, which shows quite, a lot of bullishness. And you're seeing basically an impulse, right? It's a trend, consolidation, trend, consolidation. Expect more trend. Litecoin, same thing. Actually, I told you yesterday that given how Litecoin presented itself here, I would not be surprised if this were a three-wave structure, right? So this was a three-wave structure. This was some sort of three-wave structure, and so you were preparing for a five-wave move, and that would complete a corrective move. But I no longer think that. One of the main reasons I no longer think that is the way this consolidation has been carried out. It looks more like an intrawave consolidation, like some sort of WXY, right, or WXYXZ, some sort of complex correction, where it's intrawave. And this is essentially all one contiguous impulse that's just going to continue to go and do intrawave corrections whenever necessary. This is what I see. My momentum indicators are also telling me that, right? This 4-hourly momentum indicator completely oversold, right? I.e., you have a lot of runway to the upside, okay? So that's kind of what I'm seeing in Litecoin. Obviously, a good trader always prepares for the worst case scenario. I may have been correct in yesterday's trade setup or idea or whatever you want to call it. So yeah, you just want to keep that in your mind as a possibility, as a possibility, and make sure that if it does happen, you're still okay with whatever the outcome is. I think that's important to do when you're trading. It's if you're a control freak, it's good because you know that you're not in control, and so you try to imagine all the different scenarios and how, even though you don't know which scenario is going to happen, you can control for all of those different scenarios. Okay, Algorand, same thing. I see this as continuation. You're in intrawave correction. You just been going up, matriculating, and then you just basically took a little more time, a little longer than usual, to do intrawave consolidation here because you're at a significant resistance. I'll call it a significant resistance. But I do see that continuing to the upside here in Algorand. Okay? And again, your 4-hourly momentum indicator is completely oversold. Same with Dodo. Okay? Same with Dodo. I'm seeing this as an intrawave consolidation continuing to the upside for the same reasons I just mentioned in Algorand. Dogecoin, same thing. You've gone up, you matriculated up to a significant resistance, and that significant resistance is basically the bottom of this FTX drawdown range. Okay, so that was the FTX drawdown around the 8th of November, and since then the market has pretty much gone sideways in consolidation, an absorption of that supply, and now you're just regaining this range and you're at the support level. So you've reached a level of resistance that necessitates a bit more consolidation. That's it. So I do see a continuation to the upside here. Same thing with RSR. I think RSR is you would say the same thing, except this is a sloped consolidation range. Okay? And here you lost it, and now you're just regaining it. So you're regaining this level, this range. So it's a V-shaped recovery, and now you're back in the range. So I expect you go up at least to the top of the range, probably break it, retest it, and continue. Okay? So that's what I'm seeing with a lot of the altcoins. Why do we do altcoin analyses? It's not just because you're invested in the altcoins, but when you do altcoin analyses, in crypto, at least at this point in time, it gives you another aspect of clarity on the entire cryptocurrency market. It's not like everything's doing the same thing. It just gives you another look at what the main trends that are happening may be. So as you can see with the past few altcoins that we've just analyzed, it seems to be that you're having a trend of recovery and that you're butting your head up against a lower support line, which is why you're going sideways and consolidating a little more, because you're at significant resistance. Okay. Synthetics, same thing. Do you see that? So almost exactly the same thing. You had this FTX drawdown. Okay, I just call it the FTX drawdown. I'm not like one of these channels that it's. I heard this morning. I was listening to BitBoy Crypto's live stream, which I listen to from time to time. It has pretty good breadth of news coverage on of the market, and it's kind of entertaining. But TJ, the co-founder at BitBoy Crypto, he was saying, yeah, it was Sam Bankman-Fried and FTX. They brought the market down. Like that's it wouldn't have ever, come down from 69K or something. It's just, people who trade and blame drawdowns on specific people, drawdowns that to bring that market down at that time would have required hundreds of billions of dollars repeated, not just like one time. You know what I mean? The market was, let's see, let me do this really quickly in my head, approximately 4 or 5 times the size it was now. So if 1% move right now requires about $4 billion, it would require at least 16 to 20 billion for a 1% move towards the top of the market. So, you just think about it. Just think about it. Imagine blaming that on one entity, even a bad actor, selling the market. You know what I mean? Like, it's just, this is why you do technical analysis, or else you're going to be relegated to those who have conspiracy theories about how the market works and why they're losing. And they always have a scapegoat. It's always somebody else's fault why they lost and their asset didn't go up indefinitely. Like any asset goes up indefinitely, right? Come on. Anyway, I digress. What I was saying is, on synthetics, you can see here that same channel that we just saw in RSR and Dogecoin and Dodo, right? FTX drawdown. I just say FTX drawdown because it's highly probable that the market did move on the news of FTX's collapse, okay? And that may have resulted in a further drawdown, okay? Maybe, don't know. And so you see this, and of course this drawdown is not like, a massive drawdown. It's just a slight drawdown. But it takes you into this range, and this is your consolidation reversal. So once again, you can see these moves are kind of recovering, or in the process of recovering, up and out of this channel, okay? So this is what you're seeing with synthetics. Obviously, synthetics is already in the channel, unlike, I think Dogecoin or Dodo, they were out of it, or reserve rights. I can't remember which one. So for Dent, you can see that this, you guys have to be patient. If you're not patient, you can never win at this game. The patience it requires to be successful in trading is really otherworldly. I know people say fishing takes patience, hunting requires patience. Yes, trading really requires a lot of patience. We've been waiting for hundreds of days. And I know some hunters, they set their traps and they do their scouts, and it can take months to execute a successful hunt. Maybe weeks, maybe not months, but weeks. But this really can take months. And that's essentially what we're doing. We're hunting a trend change. And so this trend change here looks like it's taking shape. Here in Dent, you have this consolidation. And this consolidation is about to break out. You can see the momentum indicator is completely oversold. So it's very, very likely to happen soon. Okay? So SHIB. Here you go once again. If you look at it as this being a drawdown, on what's that? The 8th, between the 8th and the 10th. I just call it the FTX drawdown. You get into this new range and you're moving from the bottom or support level of that range. That's it. That's basically what I see in the market. Moving from the support level of this range. We're not yet at the top of this range. Now, this is a good place to reiterate something important. If you're trading ranges, quite simply, all you have to do is pay attention to 3 levels. The bottom level, which is support, the top, which is resistance, and the midline. That was a bad midline. The midline, which is resistance if you're below it, and support when you're above it. So here, for Shiba Inu, you can see that we've just now hit the top of, or we just hit the midline, which is resistance, because it's the middle of the channel. So that's to be expected. Now, we didn't reject from the midline. What we did was we broke it and we're consolidating on top of it. So we're creating old resistance into new support, and you should see then that the next move, quite logically, is up and out of that midline, using that midline as support, either targeting the top or breaking the top, then retesting it, and then going up again. Okay? You see how that works? Keep it stupid simple. The principles, when applied regularly, will yield results and clarity in the market. I think really that's the best thing about technical analysis, just how consistent things can be. Okay? And here you have Cardano coming out of its own little range, and you hit the bottom of that range on the 29th. And what did you do? Let me draw that a little better. Actually, let me put that in with a tool just so it's more precise. But kind of working off of what we just said, what do you see here? Obviously, it's a channel. Obviously, you moved from the support of the channel. You hit the top of the channel. And what are you doing? Did you reject? No, not necessarily. You're consolidating on top, at the top resistance. So you met the midline, okay? You moved from support, you met the midline, you rejected, you went back, consolidated on the midline, hit the top, consolidated on the top. Expect a break of that top resistance. Guys, do you see how this works? This is why we do technical analysis. This is why it can be trusted. But you can't take anybody's word for it. You have to do your own research, meaning you have to apply these principles day in and day out, or however long, for 10,000 or 100,000, however many hours, so that you yourselves can understand that this works, that these principles, these concepts are real concepts that markets respect, that price action respects by and large, and that you can actually put money behind these ideas, or else you're not going to trade it. Very few people trust anybody enough to say, "Oh, you're thinking that it's going to go to this number? Okay, I'm going to just do that." No. A lot of people are going to be scared. You're not going to be able to trade well at the slightest kind of consolidation, sideways price action, or drawdown, or downwards consolidation. You're going to, jump ship. You're going to get out of the trade. You have to have conviction. There's no way to build conviction except by doing this analysis and proving it to yourself. You have to prove it to yourself. And with conviction, right, you will gain perspective. And with perspective, it's easier to have patience. It's very, very difficult to have patience and to wait hundreds of days for a big move when you have no clue what's going on. You have no plan. There's no reason for you to wait. Why are you waiting? Do you know something's going to happen, right? The only reason I show up every day and the only reason I'm still talking to you is because I have a plan. I have conviction in that plan, and I'm just waiting for that plan to play out. So you have to develop that on your own if you're really to succeed in this market. I know a lot of people get lucky, from time to time, but that's not really where you see life-changing wealth. Sometimes that is, but that's few and far between, right? True winners show up, have conviction, and the conviction is wrought or developed through their own analysis, through their own perspective. Very important, very important. So, because this is all about the DXY, and we're saying DXY, the dollar is going to collapse, let's just look at it on the smaller time frames. Here on the 15-minute time frame, you can see that this morning you put in this move to the upside. Essentially, what are you doing? Okay? For people who don't know how to read markets or who don't have any context for what they're reading in the markets, they'll say, "Oh, the dollar is pumping. It's going to, make a new high or whatever." Okay, we had just finished talking about actually this move right here. This intra-wave correction, okay? This flat correction. Now, after this flat correction, we got this three-wave move, followed by this three-wave move. Actually, you could break this down. Let's get a little more detailed here. Okay, after that three-wave flat correction, okay? And again, if your trend is going like this, your intra-wave corrections, your intermediate corrections are all going to be going against the trend. Does that make sense? So like, if you're going up in 5 waves, your wave 2 and your wave 4 are going to go down, right? They're going to go down, right? They're going to start down, up, down, or down, up, down, up, down. Do you see what I mean? But if you're going down, right, then your intra-wave corrections are going to go up. They're going to go up. So here, your intra-wave correction, your double 3 WXY went up because the general trend since September in the DXY is down, okay? Now, what to make of this? This is what I pride myself on this channel. I always say, you can't just change trend or resume a trend, okay? Even after an intra-wave correction, price does not pivot on a dime. You have to have some way where you consolidate, absorb supply, or distribute supply, right? In the case of a markup, back to a markdown, you distribute supply and change trend or adopt a trend. What am I talking about? Okay, all I'm saying is you can't just go from this to that. Okay, there has to be an intermediary space, and that's what we call A/B basing in Elliott wave theory. And all that you see here is A/B basing. Okay, it is the pivot, or it is the intermediate move that once the flat correction, that flat correction's up facing, right, is finished, you do a little bit of consolidation, sideways distribution before you resume your trend. That trend is that big drawdown that we're talking about that we expect, where the crypto bull market starts, where the dollar really plummets, okay? So let's try and read this purported AB base, okay? So any AB base is 2 degrees of AB basing and a pivot, okay? As per my research, 2 degrees of AB basing and a pivot. So let's try and read it. We're on the 15-minute time frame. And we're going to try, okay? Don't know if it's exactly that, because it's hard to say exactly how big the AB base has to be, or, to gain scope. Just to gain a scope. So we're going to try. A wave, that's your initial break of structure, okay? Right here, according to what I'm looking at. This is your counter trend, your B wave. That's every A wave has a B wave. So if that's your initial break of structure, and maybe I'm trying to think. Maybe that A wave actually starts here and that B wave goes like this, okay? I think that's an ending diagonal. So I think I think the impulse ends here. Your Y wave ends here, okay? So that's A wave, B wave. That's your first degree of AB basing, okay? So remember, 2 degrees of AB basing and a pivot. I would say your second degree is a little larger. I would say your second degree A wave is here, and your second degree B wave is all this. Okay? So I'd say that's the second degree. And now I think that what you're getting here is some sort of pivot. Okay? What the pivot's going to look like, I'm not exactly sure, but I think this is the A wave of the pivot. This is the B wave of the pivot. Maybe you get another A wave, B wave. Maybe you don't. I don't know. But I believe that it's very likely that this serves as resistance. After this consolidation, you get your drawdown. That is the big move that everybody's been waiting for, okay? We've been waiting for months, years for that big move, which would translate to the breakdown of that large head and shoulders pattern, okay? Your 15-minute time frame, completely overbought. Your hourly time frame, completely overbought, okay? Your 4-hourly time frame, completely overbought, okay? Your daily time frame, completely overbought, okay? So your indicators are also telling you the same thing. And finally, basic price action is telling you the same thing. You are at resistance right here. Not just any resistance. You're at 200-day resistance, okay? So that's my analysis. Guys, hope that was helpful. Hope that was useful. Like, share, and subscribe if you're getting value, if you've gotten value. And take care. I'll see you tomorrow. Bye.